I think Omar is having some connection issues, and we also had a connection issue on YouTube Live, but YouTube Live is starting now. It should be, it's good now. If you guys can hear me on YouTube Live, please let me know. If you can hear me, please let me know in the comments. I think Omar had a, there we go. Omar, you back?
Yeah, hey, sorry about that. I got a phone call.
That's all right.
But yeah, I was just saying, I was just driving the thing around Los Angeles and it's so much fun. It's still got so much kick, even the dual motor version. Like, I cannot believe this is the slow version of the truck. It feels way too fast for this thing to go even for a dual motor. So I can only imagine what the Cyber Beast is like. But it's just so fun to drive through LA. You really have a vehicle here that a Model 3 or a Model S driver could make their daily driver and not feel like they're sacrificing anything by giving up their smaller car, which is kind of crazy. The marketing line really is true. It's got the utility of a full-size pickup, but it still drives like a sports car, and it's still got all the technology and features you'd expect. So I think they really knocked this one out of the park. I think it's going to be a big hit.
Do you have a long trip coming up anytime soon?
We're thinking of driving back to San Francisco tomorrow, and then when they do the Starbase launch, I think I'm going to drive it to Texas. So
When is
maybe we'll
that?
go over to
I
Star.
thought they set the date for
Could be
that,
like
didn't
it's supposed to be sometime this month, maybe like the second week of March or maybe later. But so I'll drive it to Starbase and then I'll come over to Texas. Maybe we can go take it for a spin. You can see what you think yourself.
it? Good. Yeah, I would love that. I see Wes in the crowd if he wants to come up and chat about maybe like Nvidia, some artificial intelligence.
And by the way, you've never seen people react to this thing the way you have with the Cybertruck. I have some pretty hilarious dash cam clips. There was one yesterday where like this guy in the passenger side of this ice truck was just sticking his head out the window, looking back, recording video of the truck. Then his dog sticks his head out the window. The dog starts looking at it too. Like this guy's like holding up traffic. There's this huge gap in front of him, and the driver and the passenger just staring at the Cybertruck. And I mean, people just like are drawn to this thing. It's kind of crazy. You've never seen anything like this with any other product of any kind I can think of. And then last night we were parked by the Santa Monica Pier right at the beach. So we parked the Cybertruck right where you could see the beach and the ocean and the pier. And you have the strand there, the bike path. And there was like this guy riding on a bike and he just kept coming back over and over and over and like staring at the truck while he was like riding the bike. I mean, it's just so inherently viral and mimetic and contrary to this idea that oh, it's ugly, everybody hates the way it looks. People are just really drawn to it. They see it and they do a double take and they stop what they're doing and just look at it.
Um, you heard about the Giga Berlin evacuation? There's a factory near Berlin evacuated. This is at the on your screens on YouTube Live. Breaking Tesla factory in Berlin evacuated arson attack on the transformer station near the factory. Blackout, production interrupted. Production restarted, right, Omar?
Yeah, I think so. I mean, I'm not sure if the electricity's back on or not, but this isn't expected to be a major disruption. I mean, I think it just kind of symbolizes all the irrational hate towards Tesla. It's just so crazy. And not only did they impact Tesla, but they impacted others in the region as well.
Yeah, it's crazy. Do you have any other details than a couple of the headlines that we saw today?
No, I'm just going based on what I saw on X, comments from the Tesla team, comments from Elon, but it seems like they were essentially just trying to target the Tesla facility uh, for unknown reasons. I guess they had some kind of eco background or something. So it just shows really how kind of brainwashed you are as someone who's an environmental activist to be attacking Tesla. I mean, Tesla has gone from being, oh, this could be something that is disrupting the fossil fuel industry in the future to, no, this is actually happening at a scale of millions of units a year. And people are changing, they're leaving the old fossil fuel economy, and they're never coming back. And so the hostility towards Tesla, I think, is really ramped up. You've seen a lot of anti EV campaigning because people don't want the fuel economy standards to be raised by the federal government. And this whole sort of no one wants EVs, EVs are dying, and just general hatred towards EV companies in general. And I think these guys are really brainwashed. It's sad to see. They have, believed a narrative that Tesla's the problem when the reality is the fossil fuel economy is the problem.
I pinned at the top of your screens the response by Tesla. I'm going to read this real quick. Tesla says, we stand firmly by our employees, the people in Grenade and the surrounding area, and all those affected by this arson attack on the public power grid aimed at Tesla. The safety of our more than 12,000 Tesla employees is our top priority, and we are pleased that no one was injured in this attack. In addition to us, many other people in the region are affected by the power outage, and we condemn this reckless attack. We are shocked that damage to critical infrastructure, such as clinics and personal injuries, were apparently accepted. We assume that law enforcement authorities and courts will hold those responsible. We are sincerely grateful for the great support from all parts of Germany and the world and condemn violence in any form. We will not allow criminal offenses and acts of terrorism to deter us from our mission to accelerate the transition to renewable energy, and we'll start the factory as soon as possible and resume full production at the factory. And then Elon responded and said, these are either the dumbest eco-terrorists on earth or they're puppets of those who don't have good environmental goals. Stopping production for electric vehicles rather than fossil fuel vehicles is extremely dumb. Yeah. Any questions, comments? Please request to speak. Did you watch the Jay Leno episode on the new Model 3?
I didn't see it yet, but I'm sure it's great. And it sounds like they're going to do a social media Q&A too, which should be pretty fun.
Oh, really? How is that going to go, you think? Where is that going to be? On Spaces?
Yeah, I'm guessing it would be on X given Elon's ownership of the company. But I believe the Tesla account tweeted out that Franz and Lars would be doing some type of Q&A for us.
Yeah, that would be awesome. That'd be fun. I didn't see this episode either just yet. Been busy this morning. If anybody has seen Jay Leno's Garage episode on the new 2024 Model 3, please come on up to speaker board and share with us what you've learned. Oh, cool. So they're doing a 2 o'clock on March 7th, streaming live on X, right? I see you reply to
Yeah,
it.
that's what it
That's
says.
cool. Yeah, that's great. March 7th. So that's Thursday. All right, great.
And it looks like Sawyer asked the question, why are there no Giga castings used in the new Model 3? So that should be an interesting answer.
Yeah. Why do you think that is?
to ramp production more quickly.
Well, that's not working out too well, huh?
In Shanghai, it worked pretty well. And then in Fremont, it would have been even worse if they had to move to castings. So
Yeah.
I think that's probably what they'll say. I think they're gonna do it in a two-part sort of transition. One, make the user-facing changes. Two, do the non-user facing changes where you maybe change the structural design of the car, maybe you have to ramp up a new line. And you can do that much more easily because you can continue selling some of the old models and ramp up the new models and then eventually move over. But I think it makes sense to just do the user facing changes first, get that up to speed as quickly as possible so you're not impacting production and deliveries, and then make the other changes in a different phase.
Yeah, that makes sense.
I mean, these production lines, they cost billions of dollars, really. So you're setting up this production line and you really want to squeeze every dollar out of it that you can. So that's kind of why they keep some of these technologies around. Even if something's a benefit like casting, you have to compare that benefit against the capex required to tear down the line and redesign the line and the lower speed that's going to result from that. So they typically like to really do greenfield factories for their new designs. For things like the next gen platform, they like to start with a blank slate. And for existing things, they like to sort of squeeze out as much revenue from it as it can before they move it over. I think also the accounting treatment is that if they were to move it over early, they might have to take sort of a write down on that asset that they're replacing, maybe.
Sorry, say that last part again.
So, let's say like I put up a line and I say, okay, this is a 4-year useful life of this line. So I'm essentially going to amortize it over the next 4 years. And then let's say I have a new design 3 years in. I would have to, if I wanted to stop using that line and spend for the new line, I'd have to maybe take a write down on that value and sort of record that expense on my income statement early.
Right. Any questions, comments? Please request to speak. What else is on your mind today? We talked about Cybertruck, talked about Berlin, we talked about the Model 3. What else is new?
Well, the most important thing I want to see is FSD 12.3 rolling out to everybody. The people who do have it, they're posting videos. They're like, this is great. Yeah, there may be a few issues, but for the most part, it's a big improvement. I really am excited to see that roll out to everybody widely so that everybody who has 11 gets to experience 12. I think that's going to be a great moment where the light bulb really goes off, but we haven't seen 12.3 yet. We heard from some people that it was supposed to maybe roll out last weekend. That didn't happen. So if we see it rolling out to employees, that's going to be the first big milestone. 12.3 rolls out to employees. That means we're, a few days to a week away from a wider rollout. Then it starts going out. If it looks good, we start adding new users. That's one of the most important things I need to see Tesla execute on this month because, as we discussed, some people believe it could materially improve the take rate. At that point, when it materially improves the take rate and you can show earnings growth, even if it's nascent, right? Even if you just say, okay, we grew from 1 billion to 2 billion in a $100 billion business, that's enough for Wall Street to start thinking, okay, if it's growing, how far can it go? And we really need to tell that story. Until then, it's just a story of a global auto market that is oversupplied, overly competitive, and where incentives are really having to be used as the growth lever rather than technology that is, so amazing that consumers want to pay more for it.
We have a question for you in the replies about the Thailand rumors. Has Tesla abandoned their Indian factory plans, do you think, Omar?
I don't think so. There is going to be an Asian location for the next gen platform. So we know that the next gen platform is going to be made in Austin, Texas, and in Mexico. That's going to serve the North American demand. We've also heard from Elon when he visited Berlin that Berlin would produce the next gen platform as well. So that's going to supply the European market. Now, the other major market for EVs that hasn't been addressed is the Asian market. Immediately you'd think, well, let's do it in Shanghai. But the geopolitical risk of China makes another Asian gigafactory that can serve the Asian market outside of China, I think, kind of attractive, right? We're talking about something, an Asian location for the next gen platform that could do anywhere from 1 to 2 million units a year or more. So adding that into Shanghai versus another location, I think it's worth considering other locations. India is a great possible contender. I like that India has a huge workforce, low cost labor. They've got a lot of software talent. They have not a huge car market today, but I think one that will continue to grow and possibly become the world's biggest car market one day. So there's a lot of good things about India. From a regulatory side, it's kind of a mess. There's a lot of stupid laws. There's an import tariff that's 100%. There's some of the infrastructure isn't as good. So there's a lot of upsides to India, but there's a lot of downsides as well. Thailand is known as the Detroit of Asia. They make a lot of cars there. So that could potentially be a good location as well. Now, usually, even if Tesla likes one location and they're pretty certain that they're going to go with that location, they float publicly the idea of at least two or more candidates. This causes um, the governments of those regions to compete with each other to offer the best deal. For example, when Tesla was looking at the Austin Gigafactory, they said, okay, we're deciding between Austin, Texas, and Tulsa, Oklahoma. And they kind of threw out that idea, okay, you kind of have to woo us over because otherwise we could go to Tulsa. And they eventually went to Austin. They said that's where more people wanted to live. But there's always that second candidate to really aid them in negotiations.
Thank you. I see Telescope in the audience if he wants to come up and give us the latest updates on Berlin or the 12 rollout or anything else he wants to talk about. He's welcome to come up. Telescope, how are you?
Doing all right. How's everyone doing?
Oh, you're sounding better. You're feeling better?
Yeah, finally fought off that kind of long-term cold I had.
Okay, good. What's the latest at Giga Berlin?
What's the latest on what? Sorry, but yeah, connection cut out for a second.
We talked earlier about the arson attack at Giga Berlin, and I was just wondering the latest updates. I know you have some friends over there.
Yeah, so I actually was being messaged as it was happening, and there were some employees there, mostly the infosec and the kind of other security members there, who remained there for a good portion of the day. But essentially, any of the general employees were immediately sent home once they deemed that was safe enough. And they've essentially, the last update, which I need to verify with one other source, I try to always cross reference, is that someone said that production isn't planned to resume for the entire week. And I think that's a little bit too long. The last update that I'd gotten before I went to sleep was that it was only delayed until tomorrow morning with just regular business hours. So it looks like there might potentially be more of an impact than I'm sure everyone's hoping. But Tesla's taking this very seriously, very carefully. They are staying in communication through different channels with every single employee at the company, and I think Rohan. I might be butchering his name, but one official statement was put out about it. So I expect more, especially since this is such a big event. But everyone's safe, and there's no harm to the actual factory itself. And they're just kind of taking it one step at a time.
Okay, good. Thanks for the update. David, go ahead.
I had a question for Tesla Scope about the Model S launch. So I know you said that all the upgrades are already done on the line and in the factory. So can we expect the ramp to be like better than the Model 3 is right now? And will they just continue making the cars as at the same pace as they were before?
Yeah, so I don't expect any changes to the actual production rate. Now, what we did see was, I think, just 2 days after we had announced about the changes, a good amount of individuals who had orders but hadn't yet gotten their bins have seen their delivery dates pushed back by about 3 weeks at a minimum. So some were actually pushed back by about a month, going all the way into April. Some have kept their VINs and still have deliveries this week or so. So what this looks like to me is those vehicles have the potential to still be the just without those changes. But I assume that the pushback, especially for how many weeks it was for all those other orders, is very likely related to those the ambient lights as well as the bumper camera. And there are a couple other minor changes, but one thing I'll try to always say is whether you're getting the changes or not, every single Model S and X that's been delivered with the 2024 VINs has had the two critical parts required for a retrofit to be possible in the future. This still very much likely means a paid retrofit, but Tesla's been very reasonable with a lot of these minor kind of changes and component changes recently. But yeah, so if you're worried about that, please don't worry. You're absolutely safe to take delivery. The Model X, especially recently, has had the wiring related to the bumper camera in the front, and has also had cables that have been kind of tied up and are waiting inside some of the shell inside the interior of the car for the ambient lights. So that's kind of the update for now for that.
Do you know anything about if they're going to get rid of like the wood and stuff inside the interior like they did with the 3?
I don't know about any other changes. There are small
Okay.
little like technical component changes that have been updated. Kind of like with hardware theory, in fact, we actually saw hardware 3.1 and 3.2 just like about 6 months later, which updated the Ethernet speed and a couple other parameters like that. So expect little changes like that that might probably not be noticeable. But I don't anticipate any other cosmetic changes besides those two.
Okay, cool. Thank you.
Thank you, Tyler. Sammy? Sammy, you may unmute yourself and go ahead.
Yeah, so a couple things. One, my Model 3 order got pushed back a month and a half today. It's a long range with white interior, and I heard that Tesla's had problems with both. I also heard the front bumper camper rumor that it possibly got pushed back because of that. Also had a question for Omar, and same question I had for you today. I mean, if on the shareholder meeting, do you think it's possible to simultaneously move incorporation to Texas and vote on a new comp package?
Yeah, I don't know. I mean, that's not my area of expertise. But if you have any lawyers who've been following what's going on with Elon's comp, please request to speak, or any of the speakers on the board. You're welcome to share your opinion, or if you know anything more.
Yeah, this is frankly kind of an unprecedented case. So there are a few examples in history to point to on how to resolve this, and I'm not sure what strategy exactly Tesla's going to take here. So eventually they'll put out the ballot for the shareholder meeting and we'll see what's on the agenda. But it's too early to speculate on that. I don't really have the legal expertise.
Feels like we're in quicksand until those two things happen.
I'm not worried about it, frankly. I think it's going to be fine.
We have Ken on the speaker board. Ken, can you answer Sammy's question?
To be totally honest with you, I was reading one of the court pleadings from the case, and I kind of caught half of the question. So if I could get the question repeated, that'd be awesome.
The question is, at the next Tesla shareholder meeting, can we simultaneously vote to move incorporation to Texas and on a new board or shareholder proposed CEO compensation package?
In theory, I would say yes. I think the judge left that open. You may incur her wrath a little bit if you do it before she decides the case, but that's going to be up to Elon and the Tesla board. But yeah, you can theoretically do it.
Thank you, Ken. Sammy, do you think that is the primary clause over the stock price, or are there other factors, do you think?
I think Elon seems disinterested, and I think the compensation, or at least the voting rights, if not the shares, certainly plays into it.
Omar?
I think it's really important that we isolate the root cause of what's happening. And there's a lot of people coming up with theories, attributing it to different things, attributing it to Elon's tweets, or, oh, it's the fact that his compensation plan's kind of up in the air. I mean, these things may be having some minor effect. But I think really the primary driver of Tesla's price action over the last few years has really been concerns about the growth of EVs. Are EVs really going to take over the car market, or are they just going to sort of stall and ICE ends up being dominant? EVs are no more than 30% of the market, as Toyota CEO says. And the fact that Tesla's earnings are declining, right? So if they're in a situation where they're growing sales every year and earnings are growing every year, then that's a pretty good situation to be in. I think the market would reward them heavily for that. But right now, we're kind of in a situation where there are a lot of headwinds to growth that weren't really priced in. And so people are divided. The future's uncertain. Some people, like myself, say, well, actually, we still are on a pretty good track for autonomous electric vehicles to sort of take over the market. Other people are saying, look, this shows that EVs were just a fad, they were just a bubble. ICE is here to stay. And I think that sort of uncertainty is reflected in the price. If Tesla can grow earnings, if earnings are growing and sales are growing, then it's hard for anyone to really argue with them. When they're in a situation where earnings are declining, it's really easy for the bears to have some fun.
I agree. Any other questions, comments? Please request to speak. Ken, how you been?
Oh, I've been doing okay. Just been reviewing. Every time I read this opinion, quite honestly, I pick up something else that leads me to something else that leads me to something else. And what it's led me to is that on this question regarding damages and the attorney's fees, there's actually a case out there right now that McCormick has, and she's heard argument on it regarding attorney's fees. That's going to be basically the same argument that Tesla's going to make for reducing the $5.6 billion or the $6 billion, whatever, attorney fee. And she heard argument on this early this year or late last year. I can't quite remember which one it was, but it was in the case of Detroit Police and Fire Retirement Fund. Remember when all the directors had to return their stock options for overcompensation that amounted to about 900 million? Do you remember when that happened earlier this year or last year?
I don't, but I wouldn't know that anyway. But yeah, that's amazing.
Okay. So they went and had the hearing in front of McCormick for the attorney's fees. And it's generally the same situation. They won a $919 million, or they settled for $919 million. And the attorneys moved for 25% of the fee. So they valued that 25% against the 919 million that they recovered, which was largely comprised of stock options. So Tesla objected and said that the real number you should use is not the 919 million, but the value of those stock options. And that would bring, if you use the value of the stock options at the time of grant, that would bring the award down to $20 million. So it's the same situation we have here now. What are you valuing the benefit of the shareholders? You're going to value it at $55 billion, or are you going to value it at the cost of the options, which was $2.6 billion? So if you go back into the original judgment that she wrote in January, she said that this is a easily unwound transaction since the stock options were all there. Well, if it's easily unwound, why can't we use the $2.6 billion stock option price versus the $55 billion enhanced price? Would be my argument.
Yeah, that makes sense to me. So, how many times have you read your opinion?
I've lots.
Really?
Yeah, my employer's starting to look at me with a side eye. So, but it's fun. You just learn something new every day when you go through and read it, because there's so much detail involved in here that 204 pages or whatever doesn't do it justice. Once you start getting into the footnotes and everything, then it just adds a whole nother layer of complexity to it. But it answers a lot of questions of what you did in her opinion. So that's good. But we should know fairly shortly whether or not she's going to be looking at the total amount of the stock option, or she's going to be looking at the value of the stock option at the time of grant to base her decision on attorney's fees. So that's kind of exciting. I'm hoping that she answers in the affirmative, that we use the stock option grant price at the date of grant versus, of course, that 55 billion. So I would say she's probably had it. I would say within the next couple of months she rules on that. But she may hold it and do both rulings at once. But if she does, then she's not ruling on Detroit police until like 2 years out. So yeah, it's a mess.
So, since you've read your opinion a bunch of times, I guess you can answer this following question. What do you think Tesla bulls might be missing from all the discussions that are going on X? What do you think is one fact that you can bring to light from the opinion? Something that you've learned that you feel should be discussed but is not being discussed at the time?
Great question. There's so many things. I do want to correct the record on a couple different things. So this is one thing I think we miss overall. This isn't a class action lawsuit. It's a derivative lawsuit. The class action went out the window. So there are no class of shareholders that would recover anything. What's happening here in the derivative is that Tornetta, the owner of the 9 shares, is suing on behalf of the corporation, i.e. Tesla. So Tesla is the plaintiff and Tesla is defendant. So basically, Tesla's suing Tesla. That doesn't make sense, but that's the way it is. That's just crazy.
Yeah, that's amazing. Have you seen that before?
And yeah, in other cases, but never. It's not real common, but in the last 2 years it is, because in Delaware, they changed the rules in the last 2 years. That's why they had to do an amended complaint and a disbanding of the class. They originally filed it as a class action, which was allowed under Delaware. And then 2001, Delaware changed some of the rules. So they stipulated to a derivative only action and not a class action and a derivative action. So that's just a procedural interesting thing that only thing I think a lawyer would pick up. But it's interesting that Tesla's actually suing Tesla. The plaintiff will get nothing out of this case. So of that $55 billion award, nothing goes to the plaintiff. If he's going to be compensated, it's going to be compensated through his agreement with the plaintiff attorneys only, not through any award that he wins in the court. And he has to keep all 9 shares in Tesla through the end of the proceedings. So all the way to the end. If he sells those shares, guess what? Action ceases because it's no longer representative of the class.
That's amazing.
That is
Why
kind
do you
of
think?
crazy.
So why is he doing this?
Well, obviously he got paid by the plaintiff's attorneys. He got a minimum fee. There's no doubt
Right.
about that. He's a professional plaintiff.
Right.
So he may have just, done it for $10,000 and then maybe reached a side agreement with the plaintiff's attorney saying, hey, if we recover, I get 30, 40, or 50,000. Who knows? But he gets a minimum fee for being a professional plaintiff.
All right. Interesting.
Yeah. So that's interesting. And going back through the opinion, I was wrong. Elon does get nothing. He went all in or nothing. He gets nothing. And that's supported by case law. Valiant is the case out of Delaware.
All right. Thank you.
Yeah, no problem.
It's that simple. Go ahead.
Hey, how you been? Just wanted to quickly chime in on the conversation 5 minutes ago about valuation and why we've seen the price action. In my view, it's pretty simple, right? I think it's just a compression in gross margins. Like if you look at 2030 delivers at 10 million, and you just change that from 24% to 18% on the gross margin, that present value is worth like $350 billion, right? So I don't think it's actually a complex discussion, but just wanted to, say hi again, chime in there, but I don't think it's that complex.
All right. Thank you. I mean, I guess, some people would disagree that the gross margin for automotive is that important if you assume Optimus will play a more important role in 2030. What do you say to that?
Well, I'd say if you're defining people as institutions, I completely would agree, but that's not the case, right? If you look at the street's projections, I'm not saying they're right, just to be clear. I have a great view in the company, but the math they're doing, they're not going to be diligent. They're going to say in their model, here's a change in gross margin given the current margins plus future vehicles comprising of lower ASPs and next gen platform. That's potentially a headwind. That's the answer. In terms of robotics, it's not going to impact any valuation for the next 2 to 3 years. Very few funds have a 5-10 year horizon. I know you know this, but that'd be my response, that unless they start seeing revenues in the next 2, max 3 years, there'll be no price action from, massive R&D spend on future projects.
Yeah, that makes sense. That makes sense. Are you in Tesla?
Yeah, yeah. And we've chatted a few times. It's been probably 2 or 3 months, but I'm in Tesla personally. Portfolios much more concentrated, and then on the PM side, have a good exposure as well, but obviously not as intensive given the requirements I have.
Yeah. Do you have Nvidia or Bitcoin?
No, don't. I don't touch the chip makers. Never have. I just don't think I have any edge there. Anything that's more B2B, my view has always been if I can't run a business that would use that product, I can't fully understand it. So relying on third parties to make, high ticket purchases of stock if something goes south, I don't like the rebuttal of, oh, well, my research analyst that I claim knows more than me was wrong, and I, made that decision because of that. You lost a bunch of money. So same thing with Bitcoin as well.
Okay. Would you and that's true both on the long side and the short side for Nvidia?
Yeah, I'd
Like
say
if you saw clear signs of a bubble, you still wouldn't short the stock?
potentially, I'd say it'd have to be very clear, and the short-term catalyst would have to be as close to objectively true. There's a lot of ways to make money. A lot of businesses, I feel, it have to be night and day clear, and I think it's very hard to find quote unquote bubbles these days, given the information available, unless you believe there's macro asymmetry.
Yeah.
Do you think
Well,
it's a bubble? Is that why you're asking?
I mean, there's some signs, I think. Like you look at a company like SMCI, it just doesn't make sense that it went up 10x in the last few months, right? Something like that. Like, can that happen without a bubble, you think? Is there a fundamental change in the company? Or
What,
Nvidia going up so much in the last couple of months? I don't know.
would you say then, were you saying Tesla was a bubble in 2020?
Well, I wouldn't say it's a bubble, but I did argue in Q4, was it Q4 2020 when they raised capital? That was the only capital raise I didn't really disagree with. I was like, yeah, it's probably a good time to do that right now. And the obviously hindsight 2020, 4 years later, we're below those prices. So, and then you also have the evidence from Rivian and others. Yeah, I think we had an EV bubble, don't you think?
Yeah, I think we had I think the macro drove that bubble, which is why I said macros. I think the larger player, but I do agree. I think the prices are hefty, but it just comes back to running a DCF. And if the past 12 or 24 months are indicative of the amount of required compute, and people are underwriting that compute, and that will flow to these companies, and they can they have defensible moats. Maybe there's argument. I just can't say because I don't know. I haven't done the math. But the one concern I would say with Nvidia is the gross margins, right? It's not new news. We all probably know this. How defensible are those? And that goes back to my second point on I don't know the product. My other question would be even if those margins are defensible, very brief research I've done shows that apparently compute, it's a function of time, may actually go on in terms of like 1 unit. There'll be other technology that actually reduces total required compute in the future, even if output starts to keep increasing, right? At the marginal level. I think that could be a massive headwind. I'm not sure if you guys have discussed this or know about this, I guess, thesis, but that to me actually holds a lot of weight long term.
Yeah, we discussed the company at length, and we have a couple of people in the audience. If they want to come up, we can dig into it some more and have it's that simple, ask questions about valuation. But do you follow macro closely?
I mean, we all follow it, but no, I'm pretty agnostic. I never make decisions or really change positions based off macro.
Okay, so you don't really make predictions on Fed action or inflation or housing?
No, I mean, commercial, I have some input on the real estate side, but in terms of anything that I think would cause a change in the Fed's posture or an alpha there, I just think you have to be, especially nowadays. I don't think anyone really does it successfully over a long period of time. Druckenmiller was the last person, and again, that was when information was much harder to come by. I think nowadays it's very hard to sustainably do that well, and that's my 2 cents.
All right, thank you. Meta?
To account things like crypto markets at this point.
I mean, previous Fed chairs had comments on segments of the market every now and then, but it's usually a 1 sentence, 2 sentence, and it doesn't really amount to much of a Fed action being based on that. I don't think, but that's my take. It's that simple. What do you think?
Well, I'm just wondering if there's like a correlation between bubbles, whether it's crypto or others, and easy access to money, which would argue, I would argue if there is easy access to money, then the Fed doesn't have to cut rates anytime soon.
Yeah, there's definitely a correlation, right? We saw it during COVID, even aside that people were spending less money. To answer your question, I think they look at it. I don't think it will change their decision. It's really just saying, this is where capital's flowing, but at the end of the day, they have a responsibility to look at where data is tracking. If people decide to allocate their discretionary income to, I don't know what coins amazing this day, but the most asinine coin, I don't think that will have any impact on them. That's just people being idiots with money. And when I say idiots, I don't mean in the sense that crypto's stupid. I just mean dumb actions are not indicative of what the Fed's going to do.
Meta, how are you? Any questions or comments on Nvidia?
No, I'm still taking it in. I've been taking in the idea of crypto versus Tesla and just like thinking about that. I'll post something shortly. But like even with Nvidia, it's odd. Like the Intel announcement seems to have had zero impact on anybody's thesis around Nvidia. I don't even think people are looking at fundamentals at this point when they look at the stock.
What? Okay. Can you tell us about the Intel announcement?
Wes may know more details, but basically, as I interpret it, it seems like Intel and AMD are partnering where Intel will be their fabrication facility, like TSMC is to Nvidia, for a lot of their specific chips. And kind of like what Chris has been talking about, it's likely we see an increased rate of custom ASICs where AMD might work with companies to design their application specific, like super application specific hardware. And then Intel will help fabricate it very quickly in a tight loop. And they'll be able to deliver something unique to every single company. So you can see like medical companies getting certain things and data centers getting different things and so on and so forth.
Wes, what do you think?
I need to read the specifics of the announcement, but what it sounds like is a PowerPoint slide talking about what they could possibly do in the future. Is that a fair assessment, or is there more to it than that?
Yeah, it's certainly an announcement of what they're going to do going forward, right? But I think the fact that they're going to do that going forward makes me think it's surprising that anybody is looking at Nvidia and looking past 1 or 2 years without looking at a giant cliff in the future.
Yeah, I'm not seeing that. Intel's been trying to compete in AI for 6 years now. They've been competing with MLPerf, and they've largely, not been able to bring to the table anything interesting. So they continue to compete with CPUs. They continue to try to make something out of their current product set. So maybe they're looking for people to assist them in their pursuit of more efficient neural net compute. I haven't seen anything yet that suggests to me that they're on a path to eclipse anything that Nvidia is doing even now. So I'm still waiting for that.
Yeah, to be clear, I don't think they need to eclipse them. They just need to be able to be competitive on price. So if AMD is doing the design work and Intel's doing the fabrication, that the significant change there is they can work in a tighter loop in fabricating in America as opposed to abroad. And AMD is basically saying, with the announcement that they made a year ago, companies can come to them for specific needs and they could basically spin it off with the blocks that AMD owns and compete directly. So
Yeah,
the thesis
That's right.
becomes you have data center chips, which Nvidia and others arguably are good for, but data center chips are become like super simple application specific stuff, and the cloud customers might make their own stuff, and then Nvidia could lose that out. And then Nvidia announces we're going to start making domain specific chips But then you have the announcement from AMD and Intel saying we're not only going to make domain-specific chips, we're going to make it in the United States. And in those domain-specific areas, I'm not sure there's a clear winner right now.
You're not sure there's a clear winner for domain-specific chips? Is that what you said?
Correct. And it feels like NVIDIA is priced as if they're going to win both markets.
Well, they are. You would agree with that, right?
No, I don't. That's the issue.
Why? Why don't you agree with that?
I don't think that a single company will win both markets. I think most of the cloud providers will just make their own chipsets and stop using NVIDIA's generalized systems. And it'll still be popular for research purposes, but with the glut of chipsets that are out there and GPUs that are out there, I'm not sure how much demand will sustain.
You think there's a glut currently?
I think if you took all the inference that's currently running on GPUs off of the GPUs, you would have a glut of GPUs that are necessary purely for training research.
Gotcha. So from my perspective, I hear you saying a lot of what ifs, and you're stacking lots of those what ifs on top of each other. And I get that. I get that's a possible future, but it's a ton of what ifs, and that could have happened, like I said, 6 years ago, but it didn't. And I don't know if those what ifs did start falling into place. We are talking about at least 4 years for anything like that to play out with new metal and new architecture, and then a stack built on top of that. That's at least 4 years. And we can see that even with Dojo, like it's just taking an incredibly long time to build this out. So I'm so super skeptical about this, even prior to like 2028. It's just an eternity for what NVIDIA is going to do in the next 4 years of developing their chips. I mean, you've seen the announcement of the H200 that's coming in the second half of the year. They will nail that. They've nailed every single chip delivery for the past 10 years, at least, because I've been keeping track for the past 10 years with my roles at various companies. So they just keep nailing their chip delivery. So I have no reason to believe that they won't nail that. So I get your what if stacks, but it's a long road, and all of those things would have to play perfectly. And then if you talk about something that's burned to a specific algorithm, a very specific need in a specific domain, that's it. You can only use it for that one thing. It's most likely not going to be good or efficient for anything else. Whereas GPUs, you can just keep manipulating that algorithm and continue developing it and making it more efficient over time. And yeah, it gets into the whole argument of how easy it is to develop on top of CUDA.
I think you're seeing my what if statements as if they all need to happen for it to be a risky investment. I'm stating if any of the major things happen, the current pricing may not make sense. If we just hone in on one specific thing, right? Dojo is for training. The Trip ASIC is for inference. Microsoft, Facebook, Amazon, Google, they're all building their own custom ASICs for inference. Inference is pretty straightforward because while the training processes differ and there's different approaches for how you train a transformer, at the end of the day, you're just running a transformer. That's the final product. So I don't know that inference has a big moat. So if you assume inference goes away from NVIDIA, how does that affect their market cap?
Yeah, I feel like that's just complete craziness because it's not going to go away. But I don't even know. It'd be like saying, like, what if the entire gaming market went away for NVIDIA? Or what if the entire data center market went away? It's just that's not, I mean, I get that it's a mental exercise, but it's just not a future that is in our reality. Inference is just growing at such a crazy rate, more than the efficiency of inference is going up. So that's why we continue to have an insatiable need for it. So I get what you're trying to do, though. You're trying to make the case that NVIDIA is overvalued, I think, and that the need for their chips is going to go down over time. But that I just don't see how that's even possible. I'm happy to, stop the conversation at some point because I'm not hearing a good argument. It's just what ifs. It's just PowerPoints and hand waving.
I mean, I've pointed at specifics, right? So NVIDIA has stated 40% of their chips currently are used for inference. That's the 40% I'm talking about. I've also pointed out how there are many companies who have managed to fabricate inference. So comment.
Yeah, I understand that inference is growing at a crazy rate.
Right. That's it.
And you know this. Like, I know you know this. That's the best part of this conversation.
I know.
Is that I feel like you're playing devil's advocate.
I'm not.
Yeah.
I'm not. I'm trying to be very honest about my opinion here. Vulnerably so. If we agree, because the whole dojo argument falls apart, right? Because that's for training. If we agree that inference is something others are able to move off of NVIDIA, how can NVIDIA charge 80% margins for chips for inference? And why wouldn't they lose that 40% of their customer base?
Sorry,
Sorry, I didn't hear what you said. You mind? Can you hear Wes?
No, he's breaking up. I think Wes has a bad connection right now. Let me hold on 1 second. I'm gonna put him on mute because until he gets a better connection.
I want to see the product.
Wes, you're breaking up, so just stay on mute until your connection gets better a little bit. Meta, let me ask you this. So you're saying if others can't get off NVIDIA chips for inference, that NVIDIA would lose 40%. But I think what Wes is saying is that's going to take a lot of time, at least 3, 4, 5 years. And that's with a coin flop, coin toss chance. Even in the next 5 years, people who are trying to get off NVIDIA for inference may not be able to do so, even with all the capital and the talent and everything. And by the way, let's just kind of take a step back and make sure it's clear that you and I both have a very optimism bias, that we think things will eventually work out. And that, we've both been wrong on timing of things. So, what do you think about, in the context of that bias, what do you think about what Wes is saying?
Oh, I'm certainly probably wrong. I think I definitely have a strong optimism bias. But when Wes is making the argument that it takes a long time for the chip fabrication to occur, all that discussion, I believe we're conflating training and inference. There's nothing to be solved for inference. Companies have already solved inference.
Yeah, I'm making that point. I'm trying to say, hey, show me something that works more efficiently than NVIDIA for inference that has not been demonstrated yet in market share, right? TPUs can't claim that, right? Inferentia cannot claim that.
They don't need to be more efficient. That's the wrong bar. They have to be more efficient per dollar.
Yeah, that's what I'm talking about. I agree.
So you think Google's spending more money on TPUs than they're getting out of NVIDIA, and yet they're doing 90% of the compute on TPUs?
Well, there's things that I can't say from my former employment. There's probably things that you can't say due to your current employment. So I think it's fair to say that this discussion largely just needs to, time will tell. Because I have a really good understanding of the space, and I know you do too. And we just have two different sides of the coin. Now, this doesn't suggest that I know anything about what the stock price is going to do. I can just say that NVIDIA's market share is going to continue to grow over time. I don't see it going down. And I continue to see them expanding. I continue to see them being more and more a part of the AI revolution. So it sounds like you don't in some amount of time, and that's fine. Great.
It's not that I don't see them participating, to be clear. I see either margin compression, at which point they continue to compete.
Actually, let me ask you on that point right there. Margin compression. So in 3 to 4 years, Meta, what do you think Nvidia's net profit margin, not gross, not operating, net profit margin is going to be? Currently, it's about 50%.
It would probably be closer to 15 to 20. I was thinking a quarter on the gross margins probably is about where most companies tend to settle, right?
Yeah. So AJ posted a forecast that talks about in Q4 2026, he expects Nvidia's net profit margin to decline by about 1% to 2%, and still stay above 50%. So you're saying 25%. I think that it's going to dip below 50, and Wes agrees with AJ that it's going to be above 50%, and he bets the coffee on that.
And that's at the end of 2026.
Yeah, Q4 2026.
I would take the other side of the coffee bet if Wes wants to double down.
Yeah, sure. Yeah, and one of the reasons that I think so for people listening, and they can go and look up the history of Jim Keller's company, TensTorrent, is that it's taking them a really long time to bring their product to market. He just posted yesterday about a kind of high-level timetable, and they've been going at it now for 3 years, and it's going to be at least another 3 years before they really have a scalable product. So I get it. I totally get it, but if people want to do a little research, that's something they could look into.
But again, that's for training, not for inference.
Yeah, but it's also for inference too. They're also going after that as well. But also look at Inferentia. Look at AWS's earnings report. Look at their product announcements. Look at what Google talks about for TPUs. About if those are actually impacting Google Cloud, things like that. You can also it's something that people would shout from the hilltops if they had something that was like way more efficient than GPUs. You can look at Google's Nvidia spend for cloud. Like they're still buying GPUs. Like why? Why are they doing that?
There's two.
I pinned at the top of our screens the post by Jim Keller that Wes just referenced. This is also on YouTube Live as well. TensTorrent plan updates. Wes, can you give us a kind of a layman's terms overview of what Jim Keller is saying in this post?
Yeah, so I don't have it up in front of me right now, but he's talking about how they're going to launch their dev kits soon. And these are going to be the things that developers can try to start to use and help TensTorrent be more efficient with the tool creation and their entire stack, for neural net training that they're building out, because it's all going to have to be new. I highly doubt they're going to use anything that's off the shelf or open source. It's more than likely all going to be new. So they're doing that. And then he talks about taping out their Gen 2 chip, which sounds like it's probably a good year away if they're just doing dev kits now, because they need time for people to play with it and to suggest changes, because they're going to be making bare metal changes, which is low-level architecture, which changes your fab. So they can't actually make a lot of chips on Gen 1, if they're making metal layer changes instead of like more packaging changes. So that's another year. And then he talks about yet another generation, which is probably their scaled generation, and that's yet another year away, with how chips are taped out and yields and process manufacturing goes. That's about how long it takes. And then that one, if it's possible to scale, if it's a good solution to scale, then they can start to make a lot. And it takes a while to make these chips. So how long until they have, like, say, 1 million of them? If they had 1 million of them, then they would generally impact training market share for Nvidia. And so that's what brings me to the solution. Like if everything works perfect for them, we're looking at like 2027, 2028 for them to like really impact Nvidia. And, we can look at Grok with a Q, we can look at GraphCore, we can look at Cerebras, we can look at all the other big players and how many years they've had to develop a scalable production solution for training of AI neural nets, not of any type of like shallow nets or HPC or other things like that, because those are all conflated. We should look at deep neural net, LLM type, really large model training. That's what we're talking about. I'm not talking about anything else. If you are, then fine. But I think the thing that matters, I think most in this recent, kind of high profit game that Nvidia is in, that they're leading, is this large language model training in the pursuit of AGI. So that's what I just want to be sure that that's my focus.
Yeah. Okay. So, Meta, I don't want to get into this like back and forth that nobody understands. Okay. And although I'm sure you guys are getting a lot of value in those conversations, you're the only two people getting any value. So Wes is arguing that one of the points that he made in a previous space is that compute need for GPUs, for neural net training, will continue to increase at a rapid rate until we get to AGI. So for many years, as far as the eye can see, GPU demand will grow at an extreme rates. And his second part is that on the hardware front, Nvidia is number one, and the second place needs a telescope to see Nvidia. Okay. Whereas what Meta, I think, has maybe a bit more, experience with is on the software side, and maybe because you're definitely losing the hardware side of the arguments, Meta. Hate to break it to you, but Wes is winning the hardware side. Maybe what you can do on the software side is, you talked about the paper earlier that maybe reduces the need for compute. But Omar has said on that front that even if that happens, even if there's some sort of software advancements, that training a neural network model takes 1 day, whereas it took a week before, that will just lead to more models being trained, and that will not reduce the demand growth rate for GPUs. So how do you disagree with that, Meta?
It's all relative. So two things: inference versus training. So now we're switching the conversation to training. Just to make that clear. In the papers, it shows that training time is reducing by 10x. It's not a 50% reduction, it's 10x. And as James Drama even also pointed out, there's a roadmap that people can see very clearly for continued 10x reductions. This is much faster than Moore's Law.
That's fine, but do you agree that just because it happened 10x per year in the past doesn't mean that pace will continue in the future? You're assuming that it might.
No, what we're saying is the papers that are already out right now show, at least for the next year or two, 10x reductions. There's a pathway to it. So that's 100 to 1,000x reduction compared to where we were a year ago. And the other part to think about is like, is the demand going to grow at the same pace or less than that pace?
It's going to grow at a higher pace. Like, I completely concede that paper. Like, I agree with that paper. In fact, I think efficiency might actually get better than 10x year over year. So demand, I think, is going to way outstrip that. We'll continue to be insatiable with our demand. That's my argument.
To be clear, it would be helpful to me if we keep the conversation of like, are you saying training demand or inference demand?
Both, man.
Let's stick to
Both.
let's stick to training. Okay, let's stick to training right now. Okay. So Meta is saying that with the papers that are out already, there is visibility. We are pretty certain that efficiency of the use of these GPUs will improve by 2 to 3 orders of magnitude in the next couple of years. And Wes is saying that he assumes that will be the case. He assumes your point. He agrees with you that training efficiency will improve 2 to 3 orders of magnitude in the next couple of years. But even with that, Wes believes, and I think Omar agrees, if I remember correctly, that just means we're going to train bigger and bigger and bigger models because that means more accurate results, right?
I think that's a very trivialized way to look at it. At some point, you run out of data to feed the models at such large scales. So I really do think when you're hitting a model is trained on 0.2% of Wikipedia as input, not even training, just taking that as input, you are starting to hit the boundaries. So the question is, what is it preventing us from getting bigger today? Is it really hardware? Because you could just give it another day and then you have basically more hardware. It's hardware per minute, right? Or hardware per hour. So it's if you give another week or another 2 weeks, are we not already hitting those limits?
That's not the key indicator, though. And I also think you know this too, that I think this is why I think you're playing devil's advocate, because it's not the key indicator. The key indicator is how efficient your model is in the architecture of your model and how fast you can iterate on your model. And yes, the training set is very important and feeding it the right data is important, but it's not the size of the data. It's not the size of the training set that matters. I think, and this is why I think you know this, and I'm not sure why you're arguing this other side, because it's kind of different than the other discussions that we've had. So like, I know that, for instance, lots of TPUs have been tied together to train one model. And I know that data centers have gotten much bigger with the amount of training size that, you know, a given model can take in. And that is important, but it's not as important as like figuring out the right model architecture. And that's largely like what Gemini is and all of these other models that have been variants of GPT. That's extremely important. So I'm trying to understand where you're coming from still.
So the basis is on a chinchilla paper, right? So the idea is, trivially, if you increase the order of magnitude of tokens for training, you reduce the inference cost when serving. So every 10x in demand for inference, you could instead shift it to 10x training load. So that we can shift the cost. It's the same amount of cost, but you can shift it to training instead of serving. So if your serving increases by 2 orders of magnitude and you increase your training time by 1 order of magnitude, you're still saving a lot of money and a lot of TPU and a lot of GPU and all that. So when you look at it like that as a formula where you can actually now choose how you move things around, my argument is if you see 3 orders of magnitude come in, you now decide, do you need to keep putting that on training, or do you shift that over to reducing your inference cost? You're already seeing models come out now. They're like 7 billion parameters. They're tiny. They can run on a phone. And they're as good as GPT-3, ChatGPT, when it originally launched, in everything but deep reasoning. So where are we going to be in a year or 2 years from now?
Yeah, I think we're still going to have insatiable demand because it's been like that, you know, for the last 5 years, and I don't see anything that's going to stop that from happening.
I think
I don't know. I'm not quite getting a lot out of the conversation anymore. I think we're kind of like butting heads.
Fair. I think the last point I would just make is I wouldn't reason based on the last 5 years because I don't think transformers hit wide adoption until about 2 years ago.
Sorry, repeat the transformer thing.
I wouldn't reason based on the last 5 years because I don't think transformers hit wide adoption until about 2 years ago.
That seems to support my argument. So I'm not sure.
The argument
I would concede that too.
Okay, so then if it only hit 2 years ago, I would say the hardware teams may not have started focusing on it for most companies until about 2 years ago.
So you're saying a model that came out in 2017, that it hasn't started like mass adoption until 2022? Is that your supposition?
Correct. Just like
Oh.
Ajax, sometimes things come out and people don't notice it until
Sure.
one competitor
Alright.
takes off.
Okay, Ken. So you've heard arguments from both sides. Who are you ruling? What's your ruling, Ken?
I'm ruling you put the judge to sleep.
Okay. Well, we're gonna move the judge to listener mode because the judge is not paying attention. It's that simple. Do you have any questions for Meta or Wes on the topic?
One question would be, in terms of demand and projecting future demand, where do you see that going? It's a generic question, but there's two arguments I've at least thought of. One is that compute becomes so much faster and better that even if demand becomes an order higher, it's net neutral. Or do you believe it's, hey, chips get better, but relative demand due to the amount of applications becomes infinitely larger, and therefore the net delta is still massively to the upside. Therefore, demand for Nvidia and other chip providers, continues to rise. Which one of those two would you fall in?
I personally fall into the idea that demand is somewhat fungible, and so you can reduce quality a little bit and really control costs. So I'm not sure it is insatiably high. I think it peaks at some point, and then it's probably in the next year or two.
And then in layman's terms, how would you describe Nvidia? Very simply, right? They've been doing this for a while. My understanding, they have a great architecture on these chips, and it's their bread and butter. Why haven't companies, in the most simple way, competed that away yet? And why do you think that will change in the next 5 years? Even if demand that aside, why do you think the chip will change? Even if you think, hey, TPUs are.
I can answer that. Can I take a shot at that?
Please do.
I don't think the customers saw this point in time coming. I don't think Microsoft, Amazon expected to pay these insane margins and wait in line for something they see as simple. And I think they're only now trying to catch up. Meta?
You nailed it.
Yeah, and I agree with that premise, right? If that was the case, you wouldn't see these gross margins. But on that note, why is the market, in your view, then pricing this in as if these margins will compress? I think the forward multiple is not that asinine. But why do you think, hey, they just don't get it? Because everything you guys have discussed in the past 20 minutes is pretty clear. It's not a far
Well,
cross.
I mean, we've seen this with Tesla too. Analysts don't really look out more than a couple quarters. They kind of, when they do their DCFs, they just assume the things most of where they are, and there's a huge anchoring bias on every single assumption. But what I want to hear is Wes's response to it's that simple question. Wes?
Sorry. The question about why other companies haven't started competing? Yes?
Yeah, the question was exactly why hasn't these insane margins haven't been competed away yet?
No, sorry. More importantly, why won't they be? I think the current state is sort of a nothing
yeah.
burger. It's more so into the future. Why will they remain not the same, but comparably the same or relatively the same?
Yeah, that's a great question. And I could say it very simply that, and I've said this before about other things, is that no other possible company has bet their company on an AI future. And I still see Intel not doing this. Obviously, Qualcomm hasn't because they control the smartphone market, and largely, like any edge compute now, Nvidia still doesn't have a good hold on that. And largely because Nvidia they've continually bet their company on this kind of core competency that they have over time, which is CUDA. They continue to be such great investment and amazing efficiency at creating that platform. So it's very, very, I would say, capital intensive to do that, but you can't just buy a whole bunch of engineers and start forming this. AMD has tried this in the past. They still continue to try. It's not like they aren't trying, but they just haven't bet their company on it. So Jensen continues to do better, and that's kind of a high level way of describing it.
And just one more response to that, I guess. So it sounds like similar to what Yaman noted, that this wave wasn't envisioned, right? So Nvidia, previous to this wave, bet their company. If you were to assume that a lot of these other current buyers of Nvidia are going to bet, not the company obviously, but a much larger portion of that, do you see in 5 years and the relative, moat, call it, being the same? Because now that 5 year history is today, and those engineers will be, at Google or at whoever else, Amazon, Microsoft, and working on the future products that Nvidia was 5 years ago from today. So how does that dynamic play out?
Yeah. No, it's great. And honestly, like for folks that don't know, I was at Google on TPUs 5 years ago. And I could see a really good path forward for those to be more efficient at large AI compute than NVIDIA. And Jensen has just outcompeted Google. And you can see those results in MLPerf, which is the penultimate way of showing the world how efficient you are at training and inference. And I mean, it's just as simple as that. So like Google kind of bet the company on it and put a crazy amount of resources into TPUs, and that was great. And they utilize it very well. And I can talk a bit about why that works really well internally, but doesn't work as well externally to the company for like cloud reasons. But they've done themselves a great service because they can serve all of this inference and they can train all their models much more efficiently than their competitors. But in the long term, in the limit, for external companies to sell that as a service is different, as opposed to them using it internally as well. So you'd have to see Microsoft kind of like bet their business on it, which I don't think they have. They've developed a training chip and an inference chip, but just not, putting as much resources behind it as they need to kind of make that the default choice for internal development to run training and inference on. Maybe externally, like Inferentia is still a product, it's still there. I just don't see it growing like it should. So I don't think it is as efficient as NVIDIA. So even in 5 years, I don't see anything happening. And that's for the other companies that are trying to do that, which I named earlier. They continue, 5 years down the road, even though they had products that were announced 5 years ago, they haven't really brought anything to market that is scalable in an efficient way. So there you go.
Joseph.
Mellanox. Yes, that's correct. Yes. Oh, gotcha. So it is part of the moat. You're totally right, because it communicates at nanosecond speeds and delivers high bandwidth. So yeah, as NIC, network interface controllers, as those get more and more advanced, other companies are trying to keep up, like Cisco and Samsung, and there's a couple other players there that are smaller. And as they try to make those as fast as InfiniBand, that's the product from Mellanox that NVIDIA is largely using to win all of these MLPerf competitions. That's pretty much, their bread and butter on the hardware side. So yeah, it continues to be another race. And I've said this so many times, I'm wearing myself out, but Jensen's a great competitor with a great roadmap and just keeps staying ahead of the game. Yeah. And I don't think I'm the right person to answer that question. I don't have deep knowledge there. Maybe Meta does.
I don't have deep knowledge there, but I do think batteries could theoretically be a solution to that. And that might be where Elon was coming from, where if you were to set up megapacks and facilities near data centers, you could kind of alleviate some of that.
Maybe I'll give you my knowledge. So I'm aware of many large data centers in a city in Washington State that you can easily look up if you wanted to. That draws an incredible amount of power. And as those have been built out over the years, it's been like, I don't know, 15 years now that, those have been built out. The grid has to be stabilized and supports the infrastructure, in the grid has to support those data centers. And that has to keep up. And I think this is what Elon's talking about, is like the grid has to keep up at large. And I've seen this play out, over a decade and a half, and the grid just continues to keep up. There's a crazy amount of hydro that comes out of that part of the state. There's a crazy amount of wind. There's a crazy amount of solar. And it's feeding into these data centers and it's working. And it's extremely reliable and stable. And so, yeah, I get that he's calling for that. And that is kind of plays into my theory that, our demand is insatiable. But we continue to, in these areas where things can get a little tight in the stack, in the electrical stack, we continue to make things better. We continue to kind of plug those holes or ramp up facilities and make sure that those holes don't become, large cracks and then things break and we get brownouts and blackouts and stuff like that. So that's what I think he's talking about. Well, yeah. They kind of already are. Like, I know of a few folks who've invested largely in sustainable energy in my state, and they've done really well. It's a long road. There's a couple of really good podcasts that talk about how long a road it is. It can be 5 to 7 years to see these things go from crib to production. So, yeah, it kind of already is sexy in a way because with arbitrage like VPP, the virtual power plant that Texas runs now through Tesla, that is, providing people real value and like money and profit. So I do think that that's a thing that's already happening now. And I hope it'll scale to the entire US, in the future so that when there are these spikes that we can manage them better with higher costs. And people that have power plants like I do, I've got a huge solar array on my property that I provide into the grid, but I don't really get anything other than the normal rate. And I know that when things peak, I'm not benefiting from that. So I do know that large utilities do benefit from that, and they do arbitrage and they do make profit. So it is kind of already sexy.
Meta.
Yeah, I think the core thing here is the challenge is getting all the electrons from power stations to the destinations. And with solar and distributed power generation, you can kind of mitigate how many electrons you have to push through these wires that are running long distances. So the step down transformer issue is more of a, do we keep having power stations far from the places where the power is being used? I think it's less about data centers because data centers can be co-located with power stations and then you don't really need step down transformers as much.
Okay. Back to Joseph, I know you want to invest in some transformers, but you've asked this question a couple of times. We don't have an answer for you. And not only has to be a publicly traded company, but also that publicly traded company for your, can I? It also has to have a large portion of the revenues and profits, etc. Meta, back to NVIDIA discussion. Let's say, for example, that NVIDIA, the need for GPUs actually do decline, or the growth rate for the demand decreases substantially because of some sort of breakthrough in software, in training efficiency. How far ahead would the market see that potential breakthrough coming?
I don't think the market would know it until quite a while after, because I don't know what the contracts that NVIDIA signs with these cloud providers are like, but I could see they're like years potentially. So they may be required to continue to purchase from NVIDIA for a while.
So let's say, for example, that there's a paper that came out tonight. Okay, let's say you co-authored it. All right, this paper, it just makes everything like a million times more efficient. And all of a sudden, GPUs, we need 10x less GPUs for the amount of training need that we have in the pipeline. You're saying that that paper can't come out and the market wouldn't wake up because Microsoft, Amazon would be required contractually to buy these GPUs for years to come.
That's my suspicion, because I personally do see papers coming out that are saying 10x reductions, and the market's not moving.
That's fine, but as Wes said, he assumes 10x per year efficiency gains are baked in the expectations, and he still thinks that demand will continue to grow for these GPUs. So what you have to argue now is either he's wrong on that, or the papers that you're seeing are going to lead to 1,000x, not just 10x, 1,000,000x improvement.
Well, the papers I'm referencing are new. So unless these theories are over 6 months old, or somebody had insight into those papers that were coming out, I don't think that could be baked into the market today.
No, not the market. We're just talking about Wes's expectations right now.
Oh, okay, fair. Yeah. I don't know. I think that the only place, and we have to wait and see, like Wes said, is how big and how insatiable will the demand be? I think that's the key thing where Wes and I disagree, is I think the amount of data necessary for training and inference will not grow at 3 orders of magnitude in the next 2 years compared to the already planned production of chips and the massive reductions we're seeing.
Yeah. Well, Wes already said that it's going to be more than 3 orders of magnitude growth needed for training and also inference need for these GPUs.
Yeah, I mean, engineers are creative. If they have a lot of GPUs lying around, they will throw things like video at it and real world data, and you can just throw more and more at it. The question is more of like, will that be necessary and will that be profitable?
Right. It's that simple.
Yeah, regarding the compute and the training, I assume that still, end of the day, has to be derived from real world applications, correct? So if you assume future training needs increase, the assumption is that that can eventually be put and will be put into real world applications. So if you assume, again, I have no opinion here, thinking out loud, that the amount of, the efficiency will increase by order of magnitude, if not more. Are you saying right now, today, then there is, 2 or 3 orders of magnitude more in potential, not businesses, but use cases that will leverage AI and then, make that into businesses? Is that sort of the mental model you have to apply to assume, I guess, Wes's perspective is true, or just understand that a bit better?
Yeah, I think that's what he's saying. But Wes, you want to clarify that?
Yeah, I think that's pretty close. I'm just picturing all of the things that AI doesn't do today, it will do tomorrow. Like, just think of it that way. That's why it's going to be insatiable. And we can look all the way back to the start of the internet as well. Everybody's like, why do I need the internet? And now it's like, how can I not live without the internet? It's the same thing. Just the compute needs are insatiable. We'll continue down this path for the foreseeable future, is my sum up way to say it.
Well, you kind of just cornered yourself there, buddy. Because
what?
you just cornered yourself there by comparing it to the internet. Because
Oh,
here's the thing. there's an argument out there, and I think it's a very valid one. People are comparing Nvidia to Intel in the 90s. In the 90s, Intel had this chip that Microsoft would only run on that, and people thought that because of the internet, the demand for Intel's chips would grow exponentially forever, and they would never be. And look what happened today. And since then, Intel stock hasn't done anything.
Yeah, I mean, I can talk to Intel because I was at Dell in the mid 90s.
Yeah, but what you have to talk to is, why is Nvidia different than Intel?
Right, because Intel doesn't like to innovate. They like to iterate very, very slowly in the least amount possible. They're a huge, huge, huge monopoly back then, and they had huge amounts of bureaucracy, and they would move as slow as they possibly could. I liken them to the rocket companies that SpaceX is overtaking or has overtaken. They just did the slowest, craziest, stupidest little amount possible to supposedly innovate, but it wasn't. It was iteration. And then they played that off as just like, oh, this is the best thing ever. Like, you have to buy this, because they were the only game in town. And AMD wouldn't compete or couldn't compete with them, even though they weren't moving that fast. And one of the reasons why we have ASICs now is due to this. And one of the reasons why GPUs took over is due to that. And Jensen just doesn't play that same game. He continues to push the envelope. He continues to stay ahead. That's the difference. Whereas when I was working with Intel and we were, on like Pentium 1 to Pentium 2, it's like, oh yeah, we're making an improvement, but like, why didn't you guys increase the clock size more? Like, why didn't you go to a smaller transistor? Like, why aren't you doing more on your chipset development? Why are these drivers so hard to write? Like, why aren't you making investments here? And it's like, basically the easy way to describe this is they didn't care. They're the only game in town. And largely, they still are the only game in town when it comes to things like that. But now the market has just moved on. And so we see all of this other compute that doesn't run on Intel now, or AMD has actually taken a lot of the data center compute away from them because their processors are much more efficient. But I can get into way more details there, but at the end of the day, like, Intel just doesn't run like that. They're more run like a legacy auto company rather than a Tesla. They're not really innovators. And these other companies are. That's the simple way to say it.
Okay. Meta?
Would you agree that the reason why ARM didn't compete with Intel even earlier was because the market size wasn't large enough and the margins that Intel was making weren't large enough to justify the high barrier to entry and the capital outlays that ARM would have to put before they could compete?
Yes, that's pretty close. I think the other thing that's interesting about ARM is that they are way more efficient per electron. They can do more compute per, amp or milliamp or microamp or whatever you want to call it. They're way more efficient at that. That's where their IP lies. That's what they're really good at. And they have something that is extremely, like, that's a huge stack that they've built as well, to where Intel has never figured out how to compete with them. Because again, like, Intel doesn't innovate, they iterate. So they've never really cracked that. They've never cracked the discrete GPU market either. So they haven't been able to compete with that, and they've tried a couple times, really big times, twice in really big ways. But yes, I largely agree with that. But ARM has never really wanted that market. And to see ARM on stage with Intel in this last presentation that I pointed you at was like jaw-dropping, because they are obviously, if anybody that doesn't know this, like, they are, like the biggest competitors. They have two competing technologies that are at the foundation of compute. Like, it's was crazy to see them on stage together.
Meta?
Yeah, so my question is, if just keeping that situation in mind, isn't it possible that the reason why nobody was competing with Nvidia, other than like small competitors, was because the GPU market never seemed large? And I would argue that before AlexNet, nobody really looked at GPUs as like a way to use for AI. There wasn't, before large language models, there wasn't an insatiable demand for GPUs. And when there was a insatiable demand for Ethereum-based cryptocurrency use of GPUs recently, most didn't want to compete because it seemed like a volatile enough market. So Nvidia has gotten lucky in folks finding different ways to use what they've already built compared to Jensen anticipating their needs and building it for them ahead of time, which would then mean that they're iterating, not innovating.
There's that luck word again. I don't see this. And when you look at the architecture of their chips and you look at, kind of every 2 years, like this tick-tock cycle that, pretty much every chip maker has, they tend to make great strides and do more than the market expects. And when I say the market, the clients, the people who are buying their chips, they do more. And this is one of the reasons why, custom ASICs haven't been able to keep up, or these other companies haven't really come to market, because if they came to market, they would just be destroyed, because it's very easy to see that Nvidia is still, their compute is more efficient per dollar, like you pointed out earlier, but that's the only way to measure it. That's the name of the game right now. And again, I don't know, somebody said luck a couple days ago, and that really rubbed me away. There's no luck involved in making.
Well, there's some luck, but the thing is, I think, Meta, you are underestimating the work that I think Nvidia put in, the foresight, the work. I've been watching a lot of interviews and looking into things and thinking about these things, and it's not like these guys just make a box and cats are finding different ways of using the box. They're definitely changing things, and they seem to be doing it better and faster and cheaper than anybody else. I mean, you don't end up with this like 70-80% gross margins, 50% plus net margins with just luck for years and years.
I don't think they had.
But on the other thing, I agree with you that I don't like. I think that maybe Wes might be overestimating the advantage that Nvidia has, 3+ years out. I do think that the incentive to catch up to Nvidia is much bigger today than it was a couple of years ago. And I just don't think these guys saw it coming. I don't think anybody but so I think Jensen and Nvidia deserve a lot of credit for seeing it coming. But let's not underestimate the other companies, their ability to kind of grab at this hundreds of billions of dollars, multi-trillion-dollar opportunity too. Nvidia proved it. It's a very similar conversation to Tesla versus others, right? So Wes is comparing Nvidia to more of a Tesla, where maybe even if other automakers wake up to the opportunity that is electric vehicles and autonomy, Tesla and Elon will continue to outcompete others. And Wes is saying the same thing for Nvidia and Jensen. So Meta, my question to you is, you believe that to be true in Tesla's case. Why do you think that's not true in Nvidia's case?
Tesla's vertically aligned in that they make the EVs, the batteries, and their own software. Nvidia is not vertically aligned. They're more akin to an OEM in the traditional ICE model, because the software innovations in AI are not happening in their house. So when you look at Microsoft and OpenAI, if OpenAI gets into the hardware game, then OpenAI, Google, Anthropic, they're the ones that would be vertically aligned. But Anthropic's using Google Cloud, and Google's using their own Google Cloud. And they've already talked about how 90% it's running on their custom chips. I just checked their website while we were talking. They don't even have H100s for rent. So there is a difference here in that there are some companies that are vertically or can be vertically aligned. And I think it'd be easier for the software AI companies to get into outsourcing to TSMC like Nvidia does than for Nvidia to become a AI monolith.
And I think maybe Wes might argue to what you just said, that don't minimize NVIDIA's role in the partnership with TSMC. It's not like Jensen is drawing something up on the computer and sending it off to TSMC for it to be built in Taiwan. It seems to me that NVIDIA is playing, it's more of a partnership and they're building it together.
Yeah, 100%. I do want to make it very, very clear. What NVIDIA is doing is incredibly impressive. I am not trying to trivialize that. I also am saying that even as I think the demand could lessen or the margins could compress, I'm not saying they as a company would stop producing value for the world. I'm just saying the current market cap assumes so much more than I think they will do.
So you mentioned a bunch of times that Google uses TPUs, in-house developed TPUs for 90% of its training. So if those TPUs are so much better, why isn't anybody demanding them outside of Google? Why does everybody want H100s, H200s?
Anthropic is using them as well. I think the key difference is in order to use Google's chips, you must use their cloud. You can't purchase it and run your own data center.
Is that by Google's own limitation?
Correct.
Why would they do that?
So you can't open it up and see how they built it, maybe?
Interesting. Okay, well, that's a really good explanation. Because the hardware itself can be competitive, but for strategic reasons, Google has kept the use of the hardware only if you're using it in Google Cloud, which some companies, other companies may have a reason not to want that.
And that's the same for
but that would also indicate to us that maybe creating a second best hardware that is still still inferior to NVIDIA's, but close enough that others would not can choose away from paying NVIDIA such high margins is possible. Okay, I get it now.
And I would argue the same is true for Amazon, right? Like while they are making chips, it is their first generation. When they make the next few generations, they know exactly which blocks got used how much. So they can continue to optimize the layouts of their chips for their particular workloads, which may differ from Google or Microsoft.
Okay, we're going to get Wes's response if he wants to respond to that in a second. But before that, F. Ostler, what's your question? Ostler, what's your question? You have to unmute yourself for us to hear you. Okay, what are you? Is your profession? Are you professionally experienced on the topic? Okay, go ahead.
Wes, what you're looking for is the amount of compute per watt, not amp or volt or whatever. It's the amount of compute that you get for the power expended instantaneously, or if you multiply it by the time that you're computing, the amount of compute for the energy that you've expended. So that's what you're looking for there. I first took a position in Nvidia in the 2016-2017 timeframe, split adjusted at about $5 a share. And at the time, if you're looking for the one place that I think Nvidia had luck, it was when the GPUs that were used for graphics were recognized to be valuable components in high performance computing. So they were used to do, nuclear simulations, or all these different kinds of simulations, physical simulations, engineering simulations, and that's where they really caught on to a new market. And around that time, the machine learning neural net stuff was coming on, and Justin Wong definitely recognized it's coming. He mentioned it. And so it was basically high performance computing for the GPUs, neural networks, machine learning for the GPUs, as well as there was some crypto mining that was taking place at that time. And then but then it's all kind of a linear incremental improvement in the GPUs to support all this stuff up until the Chat GPT came out, which is a different kind of use of the neural nets and stuff that requires massively more amounts of compute. And that's when Nvidia really took off because of that, because now they needed all these latest and greatest units to get
Okay,
in this
and what's your
race for
question?
ChatGPT.
Any questions?
Nope. I just wanted to clarify the discussion. I think there was some incorrect information going out.
Okay. All right, thank you. I think we knew most of everything you said, unless.
People were not saying it. I mean, this idea that Nvidia got lucky on ChatGPT, well, not really. They were already well positioned, and they had the roadmap and everything going. I really think that the place was unexpected application of the GPUs into high performance computing, and then into machine learning, was the place where there was an unexpected luck component. Ever since then, GPUs just been on their game and continually improving everything, and they were all positioned, ready to go when ChatGPT came out. That's it. If you want a question, is anybody taking advantage of Tesla's offer to transfer unlimited supercharging and or FSD to a new vehicle that they purchase? Is anybody taking advantage of that?
But
He switched topics and asked a different question.
Okay.
I got to run in 5 minutes anyway.
Okay.
I do want to say I really, really appreciate, and I just want to say, Wes, like, I know that maybe at times this sounds combative, but I don't feel that way.
I feel you, man. Thanks. I appreciate it too.
Toss a coin and pick heads, but probably very minimal knowledge, probably long. I do think the AI applications are partially at their infancy. I do some early stage as well, investing, and I think there's so many potential use cases that we don't fathom today. So I think it's still go along that. Like, you really haven't seen, besides GPT, an AI startup that we traditionally see, right? Because of the cost of compute and needing a lot of these chips, etc. But if you assume that compresses into the future, you'll have these, fairly sizable businesses using this. And on the B2B layer, I think it reduces the OpEx for a lot of early stage companies. So I think there's a bunch of potential applications there as well. But it's a bit long winded, the answer, but I would say I would go long. And again, coin flip at this point. I haven't done a DCF. What was Intel's? I don't know the exact pricing on Intel. What was their P ratio? What was the revenues? Do you have any idea what that was back then? I don't know. Isn't Nvidia 40? I don't know. The past probably 2 weeks has changed a lot, but wasn't 4 PE again? The issue being the E there on the potential earnings, but it was trading in the 40s, wasn't it? But even historical, then trailing 12 months, if you just blend the two, take the weighted average, it's probably what 45. Call it, even say 50 per se. That's not exuberant given the amount of potential upside, right? Again, I'm not saying I have a strong opinion here, but Like Tesla's at what, 75 times probably, 70 times earnings. So well, that's the valuation perspective. On the actual product side and use cases, I wasn't around, in the markets in 1999, but anecdotally reviewing some of the research and things like that, everyone discusses pets.com. The actual applications of what people deem this internet, to become this massive thing, relied upon a lot of future massive tailwinds, right? If the iPhone never came to fruition, that in itself is a massive disruption and created a bunch of internet demand. There's so many other things that had to play out for the internet to be what it is today. So I think that's also why, from a valuation perspective, the use cases, at least to me, what I've seen firsthand, are much clearer. It's partially doing things that people do anyways, iterating them and automating them, which to me is not a fallacy. It's pretty simple to understand. And on top of that, you have all that potential, call it, platform like an Apple to also come into the picture and then have future revenues we can't even comprehend today. So I think the setup, again, speaking out loud, is not exactly apples to apples. I think the application part is very different, but I didn't, discuss or research the 99 bubble in crazy detail. It's more anecdotal discussions. I completely agree. I personally would not even invest in, obviously, if I had the chance, the GPT right now. But I think if what a lot of experts, I think, Meta here, I think Wes is the name, they're in the space, I assume. The argument about the cost exponentially decreasing seems to be pretty cohesive. I don't think there's much discussion around that not being true, and I think valuations reflect that. So I don't think that will be a prohibitive issue into the future. And then in addition to that, I still think as that compresses, there's a bunch of very simple layers to add on top of it, where once GPT is not as expensive, to run compute not as expensive, you do see a lot of stuff now get layered more and more as that cost comes down. So almost envision it like two axes that intersect, and obviously in the long tail, the amount of applications goes up with the cost of compute going down. That has to be proven true. If you sit here and say, "Hey, I believe the costs of compute or using these applications will not compress," the whole industry is structurally flawed. But I'm assuming, again, based off just what I've heard and even this conversation here briefly, that is sort of a given. It's more so what's that translate to in terms of applications. Yeah, that's what I mentioned earlier, right? The end of the day, the very simple mental model is, and I think Wes said that he agrees with this, is that you're just assuming that any cost reductions are offset by a larger number in terms of overall future demand due to the amount of applications. That's what I'm envisioning in the next 2-3 years. That's probably true. That would be your underlying thesis. You then do the work to say, why is this true? But I'd say as of right now, I think there is a lot to be done that hasn't been done, and therefore, again, gun to my head, sure, I'd go long. But if you believe that's not true, you should go, short or just net neutral in the company. That's end of the day what's going to determine the success or not, right? Yeah, I partially agree. I'd say it's fairly different given the B2C versus B2B element, right? And the amount of, businesses being started versus consumers spending on products. But again, I don't have any strong opinion at all. I know you know this, but I just think there's so much that can be done that has been done. And I think you're still at the infancy of it. Is my view in a nutshell.